Hey now, you're an all-star. Get your game on, go play. Hey now, you're a rock star. Get the show on.
We are back at the Big Money Big Daddy Show this Thursday afternoon. We've had a great show. We've been talking about how to become a millionaire.
Woohoo!
So it has been a great show. We've been covering a lot. We've got great information here towards the end as well. So just talking about the importance of putting money away systematically is what we're kind of going to get into, as far as what do we need to be doing in order to put ourselves on the right path to have a successful retirement. Whether that means $1 million or not, I don't know. But at least what we need to do is understand, what type of lifestyle do we want to have? Look at some of those projections. And obviously we would love to help you do that, because you need like Mark was saying earlier in the show, it's not just, pull out your basic calculator and crunch some numbers. There's a lot of things that go into that, a lot of thought that goes into that. And you need to have a conversation with a professional, whether that's us or somebody else, to help you understand what you need to be doing each and every day, each and every month, each and every year, to make sure that you have a successful retirement.
Yeah, so I ran some numbers. I was like, okay, how small of a number could I run? And I said, okay, if we're going to do, $200 a month savings for if it was an age 30, okay, if you did $200 a month at age 30 to age 65, you'd actually have to get an 11 or 12% type of rate of return to get get over $1 million, which would be, it's could be done, but I wouldn't count on that by any means. But I mean, even if you got, say, a 7% rate of return just with that $200 a month, I mean, you could get very feasibly a third of the way there. So it's possible. And I'm in no way, shape, or form saying you can get a 7% or, rate of return or anything like that. I'm running some simple future value calculations to say it doesn't take a lot of money, that if you use compounding to your advantage, you can accumulate quite a bit of money. And so, I try to put things in perspective for people. And then if we get tax advantages on our side, now we can use different types of tax advantages. Number one, we can invest in a regular account. And as long as there's not a lot of buying and selling, which we are big advocates of, you should have more of a buy and hold strategy because it's also more tax efficient. You can make sure you're not getting hit with a lot of taxes, and that money can accumulate for the most part very tax efficiently, or you can put it in your 401k plans. And your 401k, you got two choices. Take a deduction now. If you're in, a lower income tax bracket, and you feel that it's going to stay that way, you could get some tax savings now. Or maybe you're in a high tax bracket and you feel like you're going to be in a low tax bracket when you get into retirement. Well, you could do some pre-tax investments there, and it could make it to where, even though you're saving 10%, it only feels like 7%. Now, those types of strategies can backfire if you get to retirement and Congress raises the tax rates, or, you are end up in a high tax bracket. Maybe you're in a low one right now and you may end up making more money in your high tax bracket. So there's also what's called a Roth 401k, where you put money in and you know that whatever it grows to will be tax-free. Now, which one's right for you depends on a lot of circumstances, and you can definitely reach out to us, and we're happy to help with that. But listen, let's make this real simple. You need to save at least 10% of your income to even have a chance. So if you're not even there, you better start putting a plan together to get there. Now, if you're the higher your income goes, if you start getting into that six-figure mark on your income, well, it's more like 20%. If you want to be able to continue to enjoy the life that you're accustomed to, even when you are financially independent and in your retirement years. So a few things that we talk about is just changing the amount that you're automatically saving. Here's the problem. When we say, all right, when I get this money, then I'm going to save it. But you know what happens when you get that money for whatever the bonus, or, you're selling something, half the time something else pops up that you weren't expecting, and it doesn't actually get saved. So we advise that you get things happening automatically. And we advise right now, everybody listening to this show, as soon as you get home, log on to your 401k and just increase your deferral rate by 1% at least. Just do it. Watch, you'll find out it's not that big of a deal. Little small things that you can do, and then maybe you put a reminder to try to do that every quarter or every 6 months. And there's a lot of ways to get your savings where it needs to be, especially if you ever want to, get to that first $1 million. That's what you need to do. If I look at, if you say, let's go with an income of just $30,000. If you save 10%, that's $3,000, and in 30 years, if you got a 5% rate of return, you'd have about $200,000. If you got a 10% rate of return, you'd have a little under $500,000. And that's with that contribution. Now that shows you that's not enough. You need to save more. There's no doubt about it. But if you save $6,000 on a 10% contribution, if you're so if you're making $60,000 a year and you save 10%, which is $6,000, well, that's where you start to see in 30 years you can get to the point where you've got $1 million. So this can be done. I mean, those numbers aren't outrageous. It's $500 a month. Okay, I mean this type of stuff can be done. So I don't think that it can be done though with just saving the money and sticking it in a CD. I mean, you're going to have to invest it. You're going to have to take some risk. You're going to have to understand how to invest it. And you know what people do in this day and age? They go, okay, well, I'm not on pace to meet my retirement goals. I haven't saved enough. So whatever I get, this $6,000, I'm going to gamble it. I heard a buddy's going into a restaurant business and I'm going to dump my money into that. Okay, well, I heard if you buy this stock, it's set to boom. And you just end up making you go backwards and you go backwards and you go backwards and it never works. It takes a systematic plan and a systematic way using math and science to invest. You need to own equities, you need to diversify, and you need to rebalance. And you need to work with a financial coach to do this. I'm telling you, if you want to be successful, that's what you need to do. I mean, when I look at a properly diversified portfolio, it will look something to the effect of having over 16,000 unique holdings. It'll have over 20 different asset categories, and it will be diversified in over 45 different countries to start with, and then it's balanced in a way to continue to maintain that allocation. I don't think people should be trying to do that on their own, because what we will fall for in its human nature is, at the end of the day, gambling and speculating and looking for the lottery ticket. And it's not coming.
No, and it's not. And a lot of times people look at their portfolios and they think they're diversified and they're not. And I know we've had numerous radio shows on these different topics about how to diversify and the importance of, not stock picking and rebalancing and all those things. And it's like Mark's saying, it's just you can't do these types of things on your own correctly day in and day out. It's just impossible. You're not going to spend, 50 hours a week, 60 hours a week like we do, investing your time to making sure that your portfolio is working at its maximum potential. You're just not, because you're focused on other things. You're focused on your job, your career, your business, your family, your children, so many other things, the things you actually love to do after work. You're not going to want to come home and do this every day. So most people are going to hire someone to do that. So just make sure that you're finding the right person.
Yeah. I mean, and getting the right amount to retirement is what this is about. This isn't about, being a billionaire. Okay. Yeah. Those do take, so you start some business or you have something that blows up and is really huge and does really well. I get that. But we're not having conversations about how to be, Donald Trump or Hillary Clinton. We're having conversations about how to have a great retirement where you get to do the things you want and spend the time with family and be involved in your community. And that's what we're talking about. And, we put together a pretty good piece on 71 different ways that you can actually become a millionaire. And, we just looked at different ages and the amount of monthly contribution that you would need to put into the plan. And it's amazing if you start early. I mean, looking at this chart, it's like if you went into a growth portfolio, and we just looked at some different indexes. So you were, what was the rate of return on that? It was, I'll look that up here in a second. But anyways,
it was like around 10%.
Yeah, it was right around, yeah. But we looked at a age a 25-year-old only saving 100 a month gets to the $1 million. Okay. But a 45, I mean, it's not impossible in any means. You only have to save $1,100 a month. Well, most 45-year-olds make enough money. You should be able to save $1,100 a month. And that's just to get right at that million mark. So this can be done. It just takes it takes a couple things. Number one, you've got to decide you're going to do it and decide that you're going to take action. Then number two, you've got to make the decision that I'm going to quit going for the flukadook and taking all my money and buying these just crazy investments that sound so exciting and a once in a lifetime chance that all don't work out. You need to decide that you're going to go with a prudent, time-tested strategy. And by the way, that means not just going, well, I've got a broker who just tells me that they have this special research team and they know the investments to make. You better know how they're making those decisions. Because I bet you many times, I don't know, but many times it's some kind of gut feeling. They think this, they think that, and all you've done is hired someone to gamble and speculate with your money.
Which goes back to those wealth transfers you were talking about earlier. So if you haven't done some type of analysis, or we call it the MRI on your portfolio to see what you're actually invested in and how it's being invested, that's a huge piece to one of those wealth transfers that you could bring back into your pocket and turn around and take those dollars that are being lost or transferred and reinvest them and get to that $1 million that much faster.
And really what we're discussing is all the components that have to go into the financial plan. It's time to get a financial plan or to review yours if it's been a while and make sure that you're on track. And you need a plan that isn't just one that tells you right now today, but it's actually a living plan. I mean, one of the things we set all our clients up is they have their own online website that has all their information, and the values are updated daily, and we can look at and track how they're doing in this crazy world with all the things going on. They have at least some peace of mind that they can see everything there. They have a complete knowledge of how the money's invested, when we buy, when we sell, why we do it. They have complete knowledge of their risk profile. What can they expect when there are market corrections? What can they tolerate and still sleep at night? And they've made sure that they've put protection in place. They've eradicated as best as you possibly can. You can't get rid of it all, but the exposures that you have, the financial threats that are out there, people that want to take money from you, sickness, injury, death, all those things, those are real life things. And a good plan says, look, we've thought of all these possibilities, and we've put a plan in place that should work in almost every circumstance. Nothing is 100%. Okay, when nobody knows the future. World War III comes, look, it's all out the window. Okay, I get that, but I just it hurts me that so many people don't even have a solid plan. They got online, they did some little online calculator, or they don't even want to look at it because they know it's going to tell them that they need to save money. Whoa, newsflash! Of course, you got to save money, but you don't know that you can just work forever. And people say that, I'll just work forever. Okay, so let's say you do work to 70. You sure you're going to be able to go from 70 to 80? What if you lived to 90? I mean, you got to start thinking of those things. You got to get serious about it. And that's what we want everybody to do. And that brings us to the bop bang boom hard truth minute that only a good Big Daddy would tell you. Listen, 1 in 100 people are millionaires in the US. Kind of cool. Well, how did they do it? Well, only 5% of them, it came from an inheritance. That's right. That means that people are actually taking action. And America, for the most part, is failing at saving. So don't be a statistic. And even if you are saving, are you sure it's enough? Quit saying, I'm going to catch up later. Do it now. Compounding is magical, so get it working for you. Own equities, diversify, rebalance.
So it's never too soon to start is really the point on how to become a millionaire. I mean, every dollar counts, every year counts. With time, with discipline, a globally diversified long-term strategy, it's possible to become a millionaire.
one of the things I wanted to bring up too in the last segment for everyone is we know that a third of all millionaires are business owners. We talked about that. So there's some business owners out there that are listening to the show. As you may have heard, we like to do have business owners that are successful in the Houston area come on the show and kind of tell their story. So if that's something that you would like to do and get some exposure, we'd love to have you contact us and see if it's a good fit for you to be on the show. So I wanted to make sure that we brought that up, along with the fact that we have an awesome event coming up on September 22nd. I'm going to be going into the details of the 7 deadly mistakes that investors make, many of which some of you are making right now. So you've got to come to this. It's filling up fast. All you have to do is text the keyword daddy to 72727 or call us at 713-826-0426 or email us at bmbd@wealthdesignGroup.net. And don't forget to like our Facebook page.
Big money, big daddy.
My car is parked outside, I'm afraid it doesn't work. I'm looking for a partner, someone who gets things fixed. Ask yourself this question, do you want to be rich? I've got the brains, you've got the looks. Let's make lots of money. You've got the brawn, I've got the brain. Let's make lots of money.
Hypothetical examples discussed are not intended to suggest a course of action or represent the performance of any product or security. All investments contain risk and may lose value. Past performance is not a guarantee of future results. Diversification does not guarantee profit or protect against market loss. Investing in foreign securities may involve heightened risk, including currency fluctuations, less liquid trading markets, greater price volatility, political and economic instability, less publicly available information, and changes in tax or currency laws. Such risk may be enhanced in the emerging markets. The S&P 500 index is generally considered representative of the stock market as a whole. It, however, focuses on the large cap segment of the U.S. market. Indexes are unmanaged and you cannot invest directly in an index. Wealth Design Group does not give tax or legal advice. Anything mentioned in the show related to these items is not advice, and you must check with your CPA or attorney prior to taking action. Securities products and advisory